But coming back to the point, what is the logic here? That is naturally you need to understand and feel the market to feel the instrument. But when you see these things on like this liquidity, it immediately catches your eye. And at the moment, you look at this interesting zone, H4. Is there any gaps here? No, there are. Again, I want to tell you everything, but I can't tell you because it's very valuable information. I don't want to give it to you for free, but it's too cool a story for a free video. Here's the logic. Everything is rebalanced here. There's not a single gap. And after that, there was a tiny gap here, and there's a liquidity sweep. The price makes a liquidity sweep, falls here, makes a pullback, and here we have one single gap which is suitable for us to enter. And at the moment, this story becomes the point of greatest resistance for us because we have a pool of liquidity. There was already a sweep here. Everything is already rebalanced here, i.e., there is no reason to move higher. And here we have one gap and we move on. But this whole story, that is, if I just sat down on H4 just to see the gap, of course, it is extremely difficult. It should be taken into account within the framework of older time frames, at least strategic matrix. Daily, weekly, monthly, and then it should be detailed through H1, H4, M30, and already find some detailed entry points, understanding where the price is moving, there within the framework, enter the market within M15, or if you want M5, but the shorter you go lower, the more difficult it is to enter. But the logic is that from this point of greatest resistance, because everything is traded here, along with this liquidity, along with these target gaps, along with this liquidity, and the price comes to our start. The strategic matrix does its job, and that is here within the framework of this movement. What is the task, i.e. to enter a deal, to sell? It's not difficult at all. The important thing and the coolest thing is to understand where and for what reasons the price is moving. And just this video that I'm telling you is the reason, one of the reasons, half of the reasons. Yes, the other half is liquidity for which the price is moving somewhere. If you start to integrate these things into your trading, then everything will change radically. That is, we came from here, we went down here. In the moment we look further, yes, that is, we have done the work here. Everything is traded here. What does that tell us? The structure breaks, again, in the moment. What else do we see here? T-rep is forming. Yes, C-rep is forming in the moment. That is corrective rebalancing. Why? Because you know that we have already done the work here. The structure broke down here. This gap on H4, it is the only one. Yes, so there is nothing here. This is not suitable for us. We came here, we rebalanced. We came here, we took liquidity off, symbolically like this. And again, this would still be a good place to put a stop loss. Here, if we go to H1, there is also a gap here, very detailed. So let's draw it. And in the moment, again, this gap, the right way would be like this. It's the same C-rep. And where we have the next T-rep, that is the target rebalance. Here we go. This one right here, yeah, from here, this one right here, this whole story right here, that is, and you're in the moment. I realize it's hard for you right now to maybe grasp everything through my explanations, but you'll need to see it on the chart. And the logic is what? I mean, these are all these things. What are the things? These are the liquidity, these are the gaps, these are the gaps, these are the gaps, this is the liquidity, and then there is the liquidity. That's all the point of least resistance, and then at the bottom is the point of greatest resistance. Why? Well, we have a block order, yes, plus we rebalanced the strategic matrix down, we broke through the structure, we rebalanced again, we did not break through, yes, that is, if somehow it was like this, well, we made a mistake, okay? It did not happen. We broke through the structure again, rebalanced again, another order block. And that is, here the price, you know, like on the steps, boom, 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 and at the top, there is a void. That is, the market, it will be like water. It will try to fill these voids. That is, the price will flow here, take liquidity here. And if you start to look not in such a way that the price is already high there, or the price is low there, or somehow in some other formats, but you will think, where is the point of least resistance? Why is the price insufficient? Why should the price move down? And why should it move up? And so when you just take it, you will naturally need to sit down at the charts, work with the charts, look at them. That is, write out on a notebook some hooks, yes, which I have told here, and try to apply them. There is no supernatural logic here. You just need to practice. And this is just, let's say, a more detailed and more evolved story. When I was telling the story, everywhere you go in, you need to understand where the foundation is, where the magnet is. So it's an analogy just within the gap theory, let's say. And here, that is in the moment, why here is the zone of greatest resistance. Yes, because we have here liquidity sweeps. We have here elements of smart money. We have here rebalanced gaps. And plus, as a complement of structure breakdowns, yes, that is, the market indicates the intention to move higher. And here we have rebalanced tops. We have these pockets of inefficiency, gaps. Yeah, we have rebalanced tops right here. And you realize that any rebalancing down, it's a rebalancing. So it's not a new movement, a continuation. It's a rebalancing in order to gain position and move higher. Roll back and move higher. And price is not moving lower, because the point of greatest resistance is at the bottom. It doesn't make sense for the price to move down. So that's it. The job was done. It has done its work here. Rebalance this strategic matrix on the daily time frame and partially on the weekly time frame. That is all. The job was done. And these points, the strategic matrix, why I started talking, why I introduced all these parameters initially, because they are significant. And when you combine these strategic matrices of senior time frames, multiply it by tactical matrices of junior time frames, and multiply it by the point of greatest least resistance. Then you have an automatic understanding of where the price will move with a higher probability. That is the story here. Again, guys, I want to tell you that I have detailed information, of course, which I have saved for my students in personal training. That is, all the new pluses that I invent, structure, and write down for all my students in personal training go automatically for free. It's like such a bonus for personal interaction with me. But I also have a course on prop trading. Perhaps you have already seen it in my videos and so on and so forth. That is a good system. Everything works. And there I also put this information in more detail without any hiding. I mean, putting everything on the shelves. Well, there is still a lot of information here. Well, it can be detailed just up to 10-second gap. I can say with precision where and why it will stop. There is a lot of useful information that details and fills the meaning of what I told you in this video a little bit. That is already in principle. Because you have studied, and in this video, your trading will be radically transformed. You only need to practice. But the whole story is not in watching videos about working with charts. When you watch it, you will understand that it works like this. And if you think about plunging into it with your head and getting full access to this information, to the system of working with gaps, I have a course of additional video lessons. They will be at the link in the description. You can see the details to see the cost of what conditions and so on. It comes with the course on gaps. So friends, let's look at another example. I'm giving you some important additional characteristics that a gap should correspond to, which in principle is the most basic filter that you should have in order to filter out unnecessary things. Again, the same story. Yes, everything on the example of indices here, we have a big weekly gap. Here the price was growing somewhere for several weeks. And here it was rebalancing one gap at the beginning of the year. Yes, there are reasons why it did not go further. Again, these reasons are here. And so this gap here is microscopic, but it's too small to rebalance. We will talk more about it now because the benefit of rebalancing is the most important element. Because the gap itself is needed in order to gain positions profitably. Roughly speaking, if we have a gap here, but this is if there is no movement there, positions are gained, the price just touched and flew away. Such variance happen. If there is some movement there, and the factors for rebalancing coincide, it will usually be a deeper gap. And the weekly and monthly are perfect points that indicate the direction. If we look at the daily, then here we had another gap. Yes, that is, we have here this gap of the last daily, and this one here, the price came here. And what is the main point here? That is, what do you need to watch? You take a simple Fibonacci grid and stretch it over the range, and the minimum value for the gap, which you can use as a point of interest or as an entry, which we are going to talk about now. Yes. About entry techniques, the minimum requirement is beyond 50%. That is, if roughly speaking it is a downward movement, it must be in the discount. That is, it must be below 50%. Ideally, this parameter is 0.382 or 0.236. This is the optimal zone, so it will be super profitable. Here, the price kind of went into this gap, but the minimum gap was this one. And as I said, so we and you do not use just a senior time frame. Here the price has entered there. Here I will buy there. No, it all needs to be detailed for this kind of, well, we are trading. Yes, that is if you are not engaged in position trading, that you hold trades there. If you're doing months and years, you don't have hundreds of thousands of dollars or millions of dollars in there, you're using DEI trading. And because of that, we can find additional confirmations that can tell us here that yes, indeed the price has stopped out. There is some zone that is, you, for example, could mark this gap as well. Yes, that is, you do not fully understand in the moment which one will come. But in some of them, that is definitely not this one, because right here, yes, there is a gap right here. The price will definitely not come into it. Why not? Because it's not profitable. And even if the price comes into it and you do not enter there, you will already look for a point there. But to try to, let's say on FOMO, yes, that is, oh, I'm going to enter at the nearest gap, so as not to miss the opportunity and so on and so forth, is a harmful behavior which will lead you only to losses, because the price will do what is profitable for it. If you are not able to wait for that benefit, well, then you will just be a victim in all of this. If you are tired of being a victim, use these parameters, filters. Well, as if you have to estimate that you want to earn more, but you will have to wait or not to earn, but you will always get into the deal. So it has to be a certain amount of self-analysis. It should be constantly done, this self-analysis, because if you do not learn from your mistakes, you will constantly make the same thing. You're going to be sacrificing all the time. Now we're going to go to the 4-hour time frame. And here we had a definite downward movement. Yes. And right here. Now we're going to go to the 1-hour time frame as well. But the logic is that there was already a breakdown of the structure here. Here on the hourly time frame, you can see the breakdown of the structure. And we'll see how we could get in here. So the combination of this benefit, the combination of stopping the movement, yes, this is what we had. Again, if you go back to the daily time frame, you remember, yes, our matrix. Strategic and tactical. So at the moment of falling of this one, we had a movement to this strategic matrix. And at the moment, we formed this strategic matrix. That is, you already understand in advance, even before it started to develop, the potential points of movement where the price can move. So this is kind of a basis. After that, you look, yeah, well, that is, you do not try to catch knives. That is, you work together with this point minimally. Yes, perhaps you would mark this zone that everything is like this. Well, the price will reach here up to this gap. Yes, somehow detailed. Again, you don't have full maps on hand. What gaps, for what I said, that you can determine exactly where the price will reach up to 1 minute time frame, but you can intuitively guess approximately. At least you work here, and further on you see some reversal, whether it gives a reaction or does not give a reaction. Yes, that is, it was profitable to enter from here, here, here. When we came to some zone, even favorably rebalanced, yes, below 50%, then here, when it is an upward movement, yes, that is, I say everything within the framework of indices. And again, no one prevents you from learning to work on indices. Very cool tools. I am constantly talking about it. But the essence is this. We had a correction to this strategic matrix. And here the price finds support. Again, right here from this top. Yes, that is, there was a downward movement and we had a breakdown. Everything, that is, at this moment, we realize that this zone gives a reaction. And here we have, as I said, an element of smart money. And at this point, this whole area has become the zone of greatest resistance. Why? Because we went into a deep profit, because we broke the structure here, because there is an element of smart money, and again, there is another detailed block, and you use it. That is, these points, you realize that everything, the price has come, it starts to beat here, it starts to make C-rep rebalancing, corrective rebalancing, and you already have, at the moment, here is where the point should shine. What is the next strategic matrix to which we will go? Well, here again, there are also rebalances. Again, the question is why the price came to this gap. Yes, why it did not rebalance here. But the answers to all these questions are in my course, which will go together with the system on prop trading. There are certain patterns there too. They are not super complicated, but in order to get to them, you need good experience and you need to do serious work. And that's all. And at this point, you realize that any downward movements are certain corrective movements. Well, again, there are nuances. I'm saying that I'm not giving you all the information. That is, you need to understand that there are impulsive movements. There are consolidated movements. Yes, like for example here, it all needs to be understood. In consolidated movements, we have a little bit the same conditions. Again, the same, but the parameters that I set for you, yes. That is, if you decide that, like, yes, I will figure it all out myself, use these things: strategic matrix, tactical matrix, T-rep, C-rep, and benefit. And then you can use the stages in which you are working, i.e., it's an impulse or it's a correction or it's a consolidation, and combine it all. And depending on these stages, watch the gaps that are profitable, and that's it. And this technique of the greatest, the least resistance, it will have a serious impact on your trading. Again, here the price finds support on the order block, rebalances the gap, and that's it. And here in the moment, here too, if we go now to small time frames, now we'll look, there is something there anyway. Here there is a gap, and that's it. We understand that this is the point of least resistance, and that's it. And further, we have some tops. If it's Forex, there will be gaps. If it's indices, there will be updates of tops and so on.